Welcome to the 13th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore tips and techniques to maximize your wealth and increase your dividend one dividend at a time. In the episode today, we'll continue to build on our portfolio that we have been building over the past few weeks. However, like always, we'll start with a recap of the markets. Um, S&P 500 gained 0.6% for the past 1 week. Nasdaq 2 was almost flat, gained 0.34%. And here locally in Australia, ASX 200 gained a little bit more, 0.84%. However, on an overall basis, the markets were more or less flat. Bitcoin has been creating a lot of ripples, but we won't go there. Um, anyway, coming back to our portfolio, before we go into new buys, let's look at what we have bought until now. A quick recap. A few weeks ago, we had bought KDP, Keurig Dr. Pepper. We had bought 50 stocks at 37.46 for an investment of $1,873. It had an ex-dividend date of 27 September 2024 and paid out 23 cents per share. Then we bought JP Morgan Chase. We bought 10 shares at $210.5, which had an ex-dividend date of 10th October and a pay date of 31st of October, not very far from now. And last, we had bought 100 shares of AT&T at 21.91 with a pay date of 1st of November and an ex-dividend date of 10th of October. So we have had ex-dividend dates of both JP Morgan and AT&T gone by with shares with us. So we'll be getting dividends for them soon. Like always, we'll do a scan of the upcoming dividends, and that's a strategy that we have adopted, where before buying any share, we look at the upcoming dividend so that there's a quick buy. We will also ensure that diversification is there in the portfolio, and the companies are fundamentally strong with which pass the checklist that we have. So while scanning the dividend calendar, I come across CVS Health with a ticker symbol TVS, CVS. So CVS is a big pharmaceutical chain in the United States. Among other things, it had bought a large insurance company called Aetna. And as of this recording, has a market price of 60.34. It has an ex-dividend date of 21st of October, which is tomorrow. Will be paying out 66.5 cents per share with a pay date of 1st of November 2024. So let's look at dividend. Let's apply our dividend investing checklist on CVS Health and see whether it passes the criteria that we have. A quick reminder of our checklist. Do you understand the company's business? What's the dividend yield? What's the dividend for the current year? And what is the dividend yield for the current year? What is the average dividend for the past 5 years to see whether the dividend is increasing or is it flat or is it going down? What is the payout ratio, pay to earnings ratio, price to book ratio? Does the company have year-on-year revenue growth? Does the company have year-on-year profit? And does it have a positive cash flow? So we look at all these parameters, and rather than filling them one at a time, we'll fill all of them together to see how they stack up. So first of all, do you understand the company's business? Yes, I do. So CVS Health operates in pharmaceuticals. It also has health insurance and a number of other offerings and a number of stores across the US. So yes, we understand the company's business. What's the dividend and the dividend yield for the current year? It has a healthy $2.66 of dividend for the year and a dividend yield of 4.4%, which is quite good, much higher than the interest that banks would give. What has been the average dividend yield for the past 5 years? 2.12. Now, this is a very good sign. For the average for past 5 years is 2.12, which means that it has been consistently paying dividend. And for this year, it is going to pay out $2.66, which means it is increasing its dividend and has been paying dividend for a past few years. So, which is a very good sign. What is the payout ratio? Payout ratio is a very healthy 43.2%, which means that it is reinvesting around 55 to 56% of its profit back to business. And in case it has to increase the dividend over the next few years, this does have space. So a very good payout ratio. A P ratio, what is the price to earnings ratio? Price to earning ratio of 10.74. In the past episode, we have seen Anything below 20, P between 1 and 20 is considered to be good. 10.74 is good. Price to book ratio 1.01, again a very good situation. Anything below 3 is considered to be good. Year on year revenue growth, when we look at the year on year revenue, I see that it has been increasing and increasing at approximately 10 to 12% year on year, which is a very good sign for you as a shareholder. And does the company has year on year profit growth? Yes, it does. But what I did observe was that margin is low. It may be due to the competition that exists in the market or for whatever reasons, but margin I did see was low. And last but not the least, does the company have positive cash flow? Yes, it does. So when we look at all these parameters, while everything is good, but the margin being low is a watch out item. However, considering all the parameters that we have, we will go and buy this stock, and we will buy a total of 30 CVS Health shares at the price of 60.34, which gives us a total investment of 1,810 and 20 cents. So we'll add it to the portfolio. Now let's look at where our portfolio stacks vis-a-vis the investments that we have been making over the past few weeks. A reminder, we had bought KDP at 37.46 at 37.46. The current price is 36.94, giving a portfolio value of 1847. JP Morgan Chase, we had bought at 210.5, has a current value of 225.37, so which is good, giving a current valuation of 2253.7. AT&T is at 21.85 with a valuation of 2185. And CVS Health we have bought today at an investment of $1,810. Collectively, a portfolio value of 8,095 versus 7,979. That was the original investment value. However, that's not all. We also got investment for KDP, which means a cash of $11.5, which will allow us to buy more of the stock that we want, giving a total portfolio value of $8,107.4 against 7,979. However, this is quite short. It has only been 3 or 4 weeks since we have started building our portfolio. We'll continue to watch it over the weeks and see as to how it grows. And last but not the least, let's look at the upcoming dividends that we have. So we have 3 upcoming dividends. JP Morgan Chase is paying out on 31st of October. AT&T is paying out on 1st of November. And CVS Health is also going to pay out on 1st of November. Well, that's the end of the episode today. And before ending it, let's have a look at the dividend investing checklist again. So for any investment that you are making, please use the dividend investing checklist. And until the next episode, thank you very much and talk to you soon.